All right, guys, we got the latest governance call from MoonWell. Absolutely, that happened today. If you're watching this the day of recording, the 30th, we're going to dive right into it, guys. Listen, if you want to join a supportive community that's going to help guide you through the space, use the QR code at the top of the screen or use the link in the description to join our VIP community. You can book one on one coaching calls, join our group coaching calls, join our exclusive content, get all of that stuff, join our trading group, get our trading picks, and so much more. Link is down below or use the QR code. Let's dive right into the MoonWell governance call. Guys, one of my favorite decentralized finance projects, MoonWell. I'll be back at the end of the spaces and we'll have a chat. Okay, so enjoy. It's about an hour long, so put your feet up, get a cold one, relax, whether you're doing some work, driving, whatever the case might be. Remember, two hands on the wheel if you're driving, guys. I'll see you guys at the end of this clip.
Great. Well, let's go ahead and get it started with the intro. Yeah, so I guess before we get to the main agenda, I just want to point everyone that hasn't seen it to the governance call questions thread on the forum. That's where we're going to be asking the community to submit questions going forward for the Q&A portion of the call, just to help streamline things a bit. So yeah, so what we'll do is we'll post a link to the Google form prior to the Gov call every month. And yeah, so just a little bit of housekeeping to get out of the way there. I'll keep my intro short and sweet. Thanks to everyone for joining, and yeah, we'll go through our usual order of speakers. So starting with the Lunar Labs folks, moving over to Antheus, and then wrapping up with the community Q&A portion. So yeah, got a lot to get to. I'll open up the floor to Luke. If you're here and you can speak, let me know.
Yeah, I'm here. Good morning, everyone. Can you hear me okay?
Yep.
Great. So first of all, I just want to give everyone a few updates, and then I'm happy to talk at the end when the Q&A session kicks off as well. I think we're doing things a little bit differently today. We're going to take some questions that were already submitted in advance by you, the community. So, please keep in mind for next time, be sure to get your questions in early if you want them answered. But we have a really good roster of questions. I think it'll be better than just going, ad hoc. So anyway, thanks for joining us. Really exciting to be here and kind of share with you all of the good news that's been happening in the MoonWell ecosystem and everything that we've been working on for the past few months. It's been a pretty busy fall, I think, for all of us, and many of you may not be plugged into all the good news that's been happening, but I just want to kind of recap a few key things that we might not have talked about since last time. So first of all, I attended Base Camp in September. It was a really great experience. It was in Stowe, Vermont. And for those of you that don't know, Base Camp is an annual conference that Coinbase throws where they bring, a few hundred of the best builders on Base. These are people like, the top protocols like the Aerodromes and Moonwells, the Morphos, and they also bring the top creators, people that are building, content on Base. And they bring us all together in a beautiful location. And this time it was Stowe, Vermont, which is kind of a ski community, but it's out of ski season. And we get a chance to kind of collaborate for a few days and talk about the future. And it was at this time that Coinbase announced that they are looking at launching a Base token. So that was the huge news that came out of that event. And if you'd like to learn more about that, I posted a write-up on X about that day, about what the Base token means. There's some other key news about like a bridge to Solana and other things happening, but the Base token is by far the most impactful news. And why does this matter for the MoonWell community? The Base network token will bring in billions of dollars of new liquidity to the Base ecosystem once it launches. Now, Jesse did tell us that it's not likely to launch this year, so please don't get your hopes up that a Base network token is going to launch immediately. It's most likely going to happen next year or after they put some thought into it. But there's some things that I think are important for all of you to know about the Base token. First of all, Base is the largest layer 2 ecosystem in Ethereum, and it's probably the only one that doesn't have a network token. But Coinbase really looks at this as a strategic way that they can improve adoption and grow both the creator economy and the DeFi economy, the on-chain economy on Base. And they're putting a lot of thought into how they're going to do this. It's not going to be a typical liquidity mining incentive campaign. What they're actually looking at doing is looking at how people actually create content or apps or games on Base, and rewarding those people that are actually creating content, rewarding those people that are creating apps like MoonWell, like Mamo, and people that are using those apps in meaningful ways. And so I think you're gonna see that over the next several months into 2026, you're gonna see Coinbase and Jesse and the team on the Base side really put a lot of thought into how they're gonna launch this token. What activities are they gonna incentivize? For example, if you're into creating content, I would recommend downloading the Base app or getting access to the Base app if you can. I know it's still early access and invite only, but if you're into creating content, I'm sure that if you create content and post on Base, you're going to be rewarded with Base tokens. And in the same time, if you use apps like MoonWell and Aerodrome and Mamo and all the other agents out there, I think you'll find ways to be rewarded. And obviously I don't have any insider information about how that's going to happen, but they're looking at actually incentivizing meaningful use, not just farming. Like a lot of the other ecosystems out there, I don't want to name names, they have liquidity mining or points campaigns where you just bring your liquidity and you farm for a few months, and then everyone gets their tokens and goes to the next ecosystem. So Coinbase is really looking to do something completely different. They're looking to actually, accelerate the creator economy, bring, a million devs, a million builders to Base. And the way they want to do that is by, giving out, giving these incentives, the Base network token, to the people that are actually building meaningful things on Base and the people using those things. So that should really benefit all of us. It should bring in a ton of new interest into the Base economy, and it should help grow. And by some estimates, I believe JP Morgan has estimated that this could cause the Base economy to grow by 30 or $40 billion. And I think that's a pretty reasonable estimate. Now, that's not going to happen overnight, but that's going to happen over the next few years as Coinbase figures out how to do this properly. So that was number one. And then the other news that I wanted to kind of share with everyone that I think you may not be aware of is and I think I believe Crizzy is going to be dropping links to some of this stuff in the thread for this governance call. But we were featured on the Edge podcast, the Mamo agent and MoonWell specifically, and I think that's a really great podcast. If you guys haven't caught up on all the good news that's been happening in the MoonWell ecosystem, that's a really great podcast to catch up on, because DeFi Dad and Nomadic go into great detail about what the future of the MoonWell ecosystem is, how the Mamo agent ties into that, and I would just recommend that as a deep dive on all things MoonWell and Mamo and kind of understanding where we go from here. And that was really great to participate with them. Also, there's another podcast that I highly recommend that Laura Shin did on the Base ecosystem, and this talks about the impact of on-chain swaps. So that was some of the other news that has come out recently. This was first announced back in June by Coinbase at the State of Crypto event in New York City, which we participated in. That was their big, TradFi event where they brought all the Wall Street bankers in and, kind of talked about the state of crypto. And they announced that they're going to allow on-chain swaps with every single asset on the Base ecosystem will be tradable inside the Coinbase retail app. And that actually launched just recently in the last couple months. And I believe is now rolling out to almost all of the users of the Coinbase retail app. And this benefits, Mamo specifically because Mamo is now market making in 19 different pairs of, the top volume assets on Base. And so that allows the Mamo agent to capture fees as people begin to swap these assets in the Coinbase retail app. So I think that's there's a podcast with Laura Shin where the Aerodrome founder and I, Alexander Cutler, we both talk about what that means for the Base ecosystem, what that means for the Mamo agent, for MoonWell, and also for Aerodrome as well. But the big beneficiaries of Coinbase turning on-chain swaps are going to be, the apps that are native to Base, because especially, apps like Aerodrome and, apps like Mamo that are able to kind of benefit from the new volume and the fee capture that's going to come in. And so all of these things kind of tie in together. If you think about it, the Base token launch happening hopefully next year, and then on-chain swaps rolling out to retail users. And then you can kind of see there's been a couple big token launches that have happened on Aerodrome recently. One that happened just yesterday called LitKey. And that was a new launchpad type of launch that's happening with Aerodrome. And then a few weeks back, previously it was Syndicate. And those token launches, I think you're going to see Coinbase really leaning into those, because Jesse wants to help figure out how to support those and make Base the best ecosystem to launch new token projects in. And I think both of those launches were highly successful. If you happen to have Arrow tokens that are vote escrowed and you vote for them, you get basically an airdrop in the launch token. And those were highly profitable for VE Arrow voters. And so, you can see like the MoonWell ecosystem relayer actually voted for the LitKey launch yesterday. And all of these launches that are coming up are actually quite bullish for the Base ecosystem in general, because what you're going to see is that instead of the Binance Alpha launchpad type model, or any of these other pump fund launchpad models where most of the value goes to the the platform or the exchange running things, in this case the value is going to basically the Arrow token holders. And so there's no Coinbase isn't capturing like a fee on top of these things. It's going 100% to the users that actually hold tokens. And that's pretty powerful compared to, Binance Alpha or Pump Fund or any of the other launch pads where, most of the value goes to the launch pad itself. And I think you're going to see more and more of those in 2026 and, throughout this year. So kind of excited to hear how the Aerodrome team is kind of helping enable launches on Base, and how Coinbase is kind of leaning into that. So just as a reminder for everyone, MoonWell actually holds about 1.92% of the vote escrowed Arrow supply. That's almost 2%. And so we're able to kind of redirect that fee capture back into building new features for MoonWell and for the Mamo ecosystem. And then another thing I wanted to just cover really quickly, we attended Token 2049 in Singapore this year. This is the first year that MoonWell contributors have gone to Token. And there's a link to a quick 5-minute video that we filmed with Grapha Crypto that I think was pretty good, that talks about how we're participating in the Coinbase Borrow product, the DeFi Mullet product that just reached over $1 billion in TVL supplied collateral, and how our MoonWell flagship USDC vault supplies liquidity into that. So those are a few updates I wanted to give to the community. I also wanted to talk just really briefly about some things that we're working on, and we'll get to most of these in the Q&A later. But for example, there was a really volatile market condition that happened on October 10th, and Antheus Labs is going to talk about what happened, and I want to talk to the community about how to help remediate that situation. And I think markets have we saw like a complete washout of perps markets on perpetual dexes like Hyperliquid. Almost all the perps traders got completely liquidated. There was some really crazy market volatility, and a lot of the CeFi exchanges, like even the Binances of the world, kind of fell over. And so this created a lot of interesting market dynamics that we need to kind of figure out how we want to resolve as a community. And I think in general, I don't want to talk about price, but obviously prices are down bad across the board since then. And while things from a macro perspective are pretty bullish with the Fed cutting rates, I think in the short term, there's definitely pain out there in terms of especially altcoins. And so I think we should just talk about, how do we want to kind of resolve some of these issues that came up since 1010? And then also more broadly, I'm thinking about how do we want to evolve over the next few months before the end of the year. For example, we're looking at migrating governance over from Moonbeam to Base, and have Base be the locus of governance. I think it makes sense to consider that as a community, and we'd love to talk more about that and how that works. And then also we've been improving a lot of the automation behind the scenes in terms of making sure that governance proposals can be automatically executed. There's a question about that. But we've been, kind of improving a lot of the backend infrastructure that you might not be aware of, but I'll talk more about that in the Q&A section. So I've been talking for a bit. I want to kind of leave space for Darren and for Antheus Labs to talk, and then I'll circle back towards the end of the call on the Q&A session, and we can talk more about what all of these these things mean for us as a community. But thanks for joining us, and great to be here. Darren, are you next?
Yeah, I'm next. So, hi everyone. Just want to, I guess, give an idea of where we're at with the super delegate program. Shout out to the folks over at Boardroom. Sorry. So this month we onboarded 2 new super delegates. Joel, who shipped a public data dashboard and a quarterly write up with it as well. You can see that in the forums. And Chidi from Stable Lab, who handles governance, and so he has governance from the Stable Lab team. So he has a lot of experience as a professional delegate and or I guess institutional governance experience, I suppose. And something I kind of wanted to highlight to everyone is that Joel's data showed some pretty impressive statistics on MoonWell's performance for this past quarter. And so the supply of TVL for MoonWell rose about 29% for this quarter, which is pretty impressive. Between Q2 and Q3. He also found that the top 3 asset concentration dropped from 76% to 63%. So there's a bit more, there's healthier diversification there as well. Something I guess moving on, I just want to say that the super delegate program is still open. We have a few we have a couple candidates that are in review for this month, either in terms of a deliverable that they've been working on or in the pipeline. If you're interested, just message. I'd like to say that we're prioritizing people that are that have done sort of transparent analysis in the past or have shown some sort of commitment to MoonWell. And yeah, I mean, beyond that, I think something that I just want to drop here right now, but I guess maybe Luke could talk about this later. But there is some discussion about possibly migrating the governor module onto base. Markets would also stay active, or Moonbeam markets would stay active in this scenario. Beyond that, that's mostly it from me. Shout out to Joel and Chitty for jumping in this month, and thanks for the community on this. Yeah, we can kick it over to Anthias from here.
Hey guys, just want to make sure if you can hear me all right.
Yep, we can hear you.
Cool. Yeah, thanks for having me. A few things I'd like to cover today. First is a summary of the parameter changes we made over the past month. And second is an overview of the flash crash that occurred on October 10th and the implications it had for MoonWell. Lastly, we like to give our input on possible steps forward in terms of remediation and recapitalizing the markets where bad debt was incurred. So starting off with the parameter changes on base, CBXRP, we reduced the reserve factor there from 20% to 15%. EURC, we increased the reserve factor from 5% to 10%. And for both USDC and EURC, we increased the multiplier in the interest rate model from 0.061 to 0.072. What this does is increases the bar rate at the kink from around 5.5% to 6.5%. Additionally, we also took a risk-off approach in the virtual, Morpho, and Arrow markets by temporarily lowering borrow caps and essentially pausing borrows in these markets. And I'll talk more about this in a second. Moving on to OP mainnet, we just have a couple stablecoin multiplier changes here. So USDC multiplier went from 0.051 to 0.067. USDT multiplier went from 0.056 to 0.067. And USDT0 multiplier went from 0.049 to 0.061. Now what this does for USDC and USDT, it increases the bar rate at the kink to around 6%. And for USDT0, increases the bar rate to around 5%. And the reason for these stablecoin changes is to have smoother rate discovery below these interest rates at the kink. Okay, and now I'd like to talk a little bit about what happened on October 10th. So as many of you are aware, what kind of the macro situation that triggered all of this was the Trump administration announcing 100% tariff on all Chinese imports. And this event just triggered panic worldwide in markets. The reason why crypto was hit particularly hard involved a fatal flaw involving Binance. So for assets like Athena's USDE, they relied on internal spot order book prices to price them, rather than oracles, which ingest data from multiple redundant sources. So when the news broke, pretty much whales dumped into thin order books, and the prices for these assets relied 100% on these order books. And so locally, they depegged and caused mass liquidations on Binance. Now, the effect this had was also for alts, particularly those with listings on Binance. They took a hard hit. And many just like within minutes, the price just tanked like 90%. I'm sure many of you have been aware of this. So for MoonWell, Oracle's underpriced a handful of assets, particularly Virtual, Morpho, and Arrow, compared to on-chain DEX prices. And we speculate that the underlying prices of these oracles were weighted heavily on the Binance order books, which at the time were temporarily compromised. And okay, so a contract, which is like the main attacker, which caused the bad debt, they were able to exploit the difference between the oracle price of these assets and the DEX prices. Essentially what they did, they would flash loan either USDC or CBBTC, which have high collateral factors on MoonWell, and they borrowed Virtual, Morpho, and Arrow, which the difference in the prices at their maximum between what the Oracle read and the DEX prices for Virtual was around 36%, for Morpho was around 28%, and Arrow around 20%. And so what this allowed them to do, they would just flash loan, say USDC, borrow Virtual, and then immediately sell the Virtual for more USDC than they flash loaned. And so they could repay the flash loan all in the same transaction and profit the difference. And they did this around 25 times. They would usually like flash loan around like 100K in USDC or CBBTC. And so all this time they're profiting from this arbitrage, but they're also just essentially spawning in artificially created collateral, which as the price of the debt continues to go down, they're able to then withdraw this collateral that they pretty much spawned out of thin air. And so when prices inevitably went back up, so they crashed and then almost instantly they went back up, liquidators struggled to repay the debt profitably for the same reason that created the arbitrage in the first place, the discrepancy between the Oracle price and the DEX price. So as the debt value went up, liquidators were unable to step in, and ultimately this caused the bad debt. In the end, there was about a 1.7 million in bad debt that was realized. It was mostly in Virtual, which suffered the highest price discrepancy, and the attacker made out with around 267 ETH in profits. Now, MoonWell wasn't the only protocol targeted by this address. Notably, they also hit AVAIL and Venus, as well as other AVAIL and Compound forks. So to summarize, what made this possible was borrowing these volatile alts at high collateral factors using USDC and CBBTC, which had 88 and 85% collateral factors respectively, and a severe mispricing between the DEX prices and the Oracle prices that allowed for this instant arbitrage using flash loans. Ultimately, what caused the bad debt was the continued mispricing of the debt as values rebounded immediately after the crash, which rendered liquidations largely unprofitable. So to immediately curb the threat of this happening again, we took a risk-off approach in these markets. We decreased borrow caps for Virtual, Arrow, and Morpho below their current borrow levels, which essentially pausing borrows in these markets and would prohibit something like this from happening again in the short term. As for next steps, we'd like to kind of give our thoughts here about how we could like move on from this. I think what makes sense is just using what we have in the current reserve. So currently there's a lot of reserves held in ETH and USDC that we could use to cover the debt. And what we recommend is like basically TWAPing these swaps to virtual and Morpho over the next few months. And what this will ensure that the price we get on the swaps is an average, which would protect against like short-term highs or lows of these alts. Actually, interestingly, the price of virtual has like gone up like 90 or 100% over the past week or so, which has just increased the value of this debt. And so like these things are likely to happen. The price is going to go up, the price is going to go down. But if we repay the debt over the next few months, we're going to get like an average price. And so that's what we recommend doing there. But we'd like to take some time to open it up to questions. I think Luke had some questions prepared. I think maybe the first question immediately kind of segues from what we're talking about.
Yeah, first of all, thank you very much for that thoughtful analysis, Chris. It was a really crazy volatile day, and because Binance's liquidator broke, I think that kind of broke the entire DeFi economy as well, simply because all the major protocols rely on Chainlink for price feeds. And like as you mentioned, the interesting thing to me was that it was all the assets listed on Binance that were most impacted. Morpho, Virtual, and Arrow, and those are the altcoins that we're really proud to have markets for on the MoonWell side, simply because we're probably the best venue that you can get leverage against those assets for. And so, having them as collateral assets also means they are borrowable, which led to this opportunity for, I guess you would call it a highly profitable trading strategy. Although I think the challenge is that for protocols like us, Chainlink has always been the most reliable price feed out there. It's the one that doesn't have downtime. It's the one that everyone has historically relied upon. And in this case, this was an interesting scenario where the Chainlink price, since it is a volume-weighted average price, and most of the volume was happening on Binance, it seems that it was just reflecting a price that was artificially lower than the DEX price, the actual on-chain price, and that created this arbitrage opportunity. And I think that there's some, the silver lining is that the bad debt is minimal compared to, the total deposits on Base. So that is the silver lining. However, the bigger concern that I have is, what do we do longer term to make sure that this doesn't happen again? I think in the short term, I really like your solution of leveraging, ETH and USDC reserves to sort of cover the shortfall and repay the bad debt, so that it doesn't involve any type of a haircut or anything like that from the safety module. I think that's a better solution, given the bad debt is relatively small as a percentage of total deposits. But I think that we want to figure out, how do we kind of make our oracles more resilient to future events that like this that might happen, because we can't always rely, especially when there's more and more swaps happening on chain, we can't always rely on CeFi exchanges to have accurate pricing, especially for these assets like Arrow that have really deep on-chain liquidity, and Virtual, for example. Virtual has a ton of on-chain liquidity on Base because all the agent coins are paired with it. And so if there's a meaningful price discrepancy between the virtual price on a DEX like Uniswap and the virtual price on a central exchange like Binance, we should probably fall back to the DEX price. I think that makes a lot more sense than just continuing to rely on, what might be an incorrect price, in this case, which was an incorrect price for virtual. It was artificially too low. And it also kind of highlights that like a lot of these altcoins have very thin order books on the central exchanges, but they have very thick order books on the decentralized exchanges. And this is sort of a, kind of something that's changed in the last few years. I think all of us have noticed that, there's actually deeper on-chain liquidity, for example, for the Mamo agent than there is on any central exchange like Coinbase. And so that kind of, paints a picture where, maybe we should continue to use Chainlink, but we should consider relying on like a DEX price anchor, where if the price of Chainlink goes too far out of bounds, we fall back to the DEX price anchor so we don't create these arbitrage opportunities. And I'd love to kind of hear the community's thoughts on that. But Alex, I think you have some questions prepared, and so maybe we should just jump into those, and I think that will kind of segue into kind of answering some of these questions the community has. And then in the short term, I think we should definitely kind of continue with a vote, maybe a snapshot vote on how to best kind of proceed with the bad debt remediation in the short term. Alex, do you want to jump in?
Yeah, I was going to invite Darren, actually. Darren, if you wanted to get
sure.
on with the questions.
Yeah. So we have a few questions from the survey that was distributed prior to the call. So first question is, has the 1.7 million in bad debt from the recent liquidation event been paid back in full from the reserves? And if so, will this affect staking awards? If not, how is it being addressed?
Yeah, great question. So this gets to the heart of the matter. So today, the bad debt has not been remediated. It still exists in those markets, in the virtual arrow and morpho markets, with, as Chris mentioned, most of it concentrated in the virtual market, where the arbitrage opportunity was the greatest. So that's what we want to decide as a community, is how to how to repay that bad debt so that there's no bad debt on base. And I think that it seems like the best course of action, although I think we need to talk about this as a community, is to use the significant ETH reserves and USDC reserves to help repay this over the next few months, like Chris suggested. However, this definitely will impact the protocol reserve auctions, that is. So for example, in the past months, we've been able to auction off excess reserves and help increase the staking reward for the safety module stakers. That means that reward will inherently be, reduced in size, simply because there will be some of the reserves redirected towards recapitalizing the bad debt. Now, the alternative would be for us to maybe, repay the bad debt out of the safety module. Although I think in general, I tend to not like that alternative as much, because that just creates demand to unstake. And also, it makes it so that staked well would no longer necessarily have a one-to-one peg against well. And so I think, given that the actual size of the bad debt is relatively small, it probably makes sense for us to use existing reserves to repay the bad debt, as opposed to just simply selling well, because especially given, the price of well is down significantly since all-time highs, just in my humble opinion, it doesn't make a lot of sense to be selling well from the safety module in this environment at all-time low, or very close to, cyclical lows, to recapitalize the bad debt. It seems to make more sense to just use protocol revenue, which is pretty significant, to basically repay that over the next few months. But that will, like I said, inherently reduce the staking reward temporarily while that debt is being repaid. So I think there are kind of trade-offs there, but I'd love to hear your feedback as a community. If you guys want to chime in the forums, I think that's a good place to discuss this. There's a thread already started by Entheus Labs, by Chris and his team, that goes into more detail about what happened. Chainlink has replied in that thread. However, I've asked the Chainlink team to provide data about what exactly happened, and they haven't really been very forthcoming with the data. And to be honest, I'm a bit disappointed that we invited them to this call as well to talk about it, and they declined to participate in this call. And I think Chainlink is dealing with the fallout from a number of other larger protocols like Venus on BNB chain, where the same issue impacted them more significantly. And so I think they're probably just like taking a maximally conservative approach. Maybe they've gotten their lawyers and their legal team involved, which always slows things down. But I am kind of disappointed because Chainlink has been a really strong partner for MoonWell for 4 years now, and it's kind of disappointing to see that they don't really want to provide data or help us kind of remediate the situation. I was really hoping that they would actually just come in and decide, hey, like, we're just going to repay the bad debt because you relied on our price feeds and they were printing a wrong price or an inaccurate price for a while. So that hasn't happened to date, but we're going to keep requesting that Chainlink, provide data with the community about what exactly happened, and we're going to keep requesting that Chainlink come forward with solutions to this problem, and not necessarily just kind of try to cast the blame on others, because ultimately, I think we've always relied on Chainlink, and it kind of broke DeFi in this case. And we need to maybe consider, should we be using on-chain price anchors as opposed to CeFi price anchors, which is essentially what Chainlink is. And so yeah, it's something to consider. It will definitely impact the staking reward, to summarize, in the short term, but it seems less impactful than taking a haircut on the safety module itself. We'd love to hear your feedback, though. Do you want to go to the next question, Darren?
Yeah. So for question 2, comes from Roman in the forums. If MoonWell monthly revenue went much higher, would this reflect in staking APR with monthly buybacks, or is there a cap/diminishing return? Other projects have announced or plans to do annual buybacks. Can MoonWell come up with a similar plan?
Yeah, so this is a great question. Yes, absolutely. So the more borrowing demand there is in a couple places, both on the core markets themselves. So the more borrowing demand there is for USDC against Bitcoin, staked Ethereum, and other assets, that also increases revenue for the protocol in the form of reserves, which increases the buybacks, which increases the staking rewards. Now, that revenue also comes from the vaults themselves, the MoonWell flagship vaults, and the Frontier vaults that provide performance fees. Those all also go into reserves and are used to buy back well. So all of those things help increase revenue and can help increase the staking rate. So they're all beneficial to the ecosystem. Now, you have an interesting question about why not do annual buybacks. I think that for a lot of protocols, that makes sense, where they don't have a really dynamic reserve auction mechanism. In this case, I think as a community, we've developed these, what I think are some of the most innovative smart contract systems in the space, to where we can do dynamic reserve auctions every 4 weeks. And so it makes more sense, in my humble opinion, to just do these more dynamically through on-chain governance, like we have been doing them. They can happen every 4 weeks instead of every year. But for other protocols like layer ones that might have been around for a long time, it might make sense for them to do buybacks on an annual basis, where they don't have governance mechanisms to do that. But we've invested pretty heavily in automating this so that it all happens automatically. I'm really proud of the team and all the contributors that have kind of built this tooling. There's a really if you ever want to geek out on it, I would encourage you to maybe check out some of the forum posts on the safety module upgrades and the reserve auctions, and how we've basically made it so that protocol revenue can be automatically put into these reserve auction contracts, and then as the auctions take place over a couple of weeks, it gets automatically recirculated back into safety module staking rewards. It's a really beautiful kind of system that I think everyone has created, and I think this gives us the capabilities to kind of grow and scale as borrowing demand grows and scales on the base network. And an interesting milestone that I just wanted to share with everyone is that Coinbase recently just reached a $1 billion total collateral size on the Bitcoin loan product, or Bitcoin borrow product, that our MoonWell flagship vault helps power the borrowable liquidity. And that's a pretty big milestone, because they haven't yet really advertised it very much or marketed it much. And then there's some new news that they're going to increase the maximum collateral amount from $1 million to $5 million per customer in the next few days or week or so, I think. So that should increase the borrowing demand as well. And also wanted to mention, some of you may have noticed that Steakhouse recently secured a vault curator role for a new Coinbase Earn product, which lets you earn yield by supplying borrowable USDC liquidity. MoonWell contributors have also put forth a proposal to have a MoonWell vault participate in that. And so we're hoping that in the next few months or so, that Coinbase will consider adding MoonWell flagship vaults to that Earn product, so that we can also receive deposits. That's been really well received by Coinbase customers, and part of the reason why is because Coinbase is incentivizing it very heavily with Morpho rewards, with additional rewards, so it has like an 8% yield. We hope to get MoonWell vaults in that same product. We're just talking with the base team about when that can happen, and trying to figure out when they're going to expand that to more vault curators. We actually think we have a really compelling story where our vault is actually owned by the DAO, the MoonWell DAO, with over 100,000 token holders, which makes it more secure than a vault that is controlled by a multi-sig, if you will. So yeah, exciting on the revenue front. I think there's a lot of potential, especially with the base token launch next year, hopefully.
Awesome. Moving on, we have a question from Xtezi Mister, who asks, could you explain why it was necessary to launch a separate token for Mamo when we already have MoonWell? Wouldn't it have been better to unify the system? What makes Mamo beneficial to the MoonWell ecosystem?
Great question. So there's a couple of reasons why Mamo is a different token. Number one, the MoonWell token gives you governance rights to govern the MoonWell protocol, and also gives you, it has the ability to kind of capture value from all the lending and borrowing activity that happens in the MoonWell ecosystem. And the Mamo token is different. It's a utility token, and it's designed to basically provide holders with 100% of the revenue for the Mamo platform, which is really a platform for finance agents. So you could think of the first iteration of Mamo as basically being, a simple to use product powered by MoonWell that allows you to automatically compound your USDC and Bitcoin positions and captures trading fees from all the Mamo pairs on the Aerodrome DEX. And this product really doesn't need governance because it's basically built on top of MoonWell, and it provides borrowable liquidity for Bitcoin borrowers on Coinbase, and also make sure that everyone using Mamo gets the highest rate at all times. So I think there's a lot of benefits to both MoonWell and to Mamo holders, even if people that have never used MoonWell before, simply because Mamo is providing, I think last time I checked, about $50 million of liquidity into MoonWell markets and vaults. And so that's helping to boost the borrowable liquidity on the MoonWell platform. That's helped to kind of, as you highlighted earlier, it's helped to increase the total deposits significantly over the last few quarters or few months. And then it's also helped to bring a lot of new users into the MoonWell ecosystem that have never used crypto apps before. And so I think as we kind of expand the Mamo platform over time, you're going to start to see the benefits of the Mamo utility token and why it's different. So for example, the on-chain swaps that I mentioned earlier that Coinbase is enabling in the retail app, they haven't really marketed that very well, and it's just rolling out to all the users now. But when they really start marketing that, and you'll start earning base tokens in the future for doing on-chain activities like swapping, Mamo is going to be capturing a percentage of those fees of all the DEX activity. And that's going to be pretty significant as a revenue driver for the Mamo utility token. And as we come up with more and more agentic finance use cases, for example, not just lending, but also maybe trading, swapping, there's going to be more and more, personal finance agents that are kind of built into the Mamo platform. And as we grow that out, that just creates more and more revenue opportunities for Mamo holders. And so I kind of think of it as, like, if you think of MoonWell being, sort of the core lending primitive that everything is built on top of, lending and borrowing coins, basically, lending and borrowing digital assets, and providing the best and safest place to do that. And then the Mamo agent platform built on top of that allows us to build, AI into on-chain financial agents in a way that lets the agents kind of leverage these core primitives, the MoonWell core markets and the Morpho vaults, leveraging them to make newer and more powerful financial products on top that are powered by AI, and then also leveraging some of the passive features of DeFi in general, like for example, market making, becoming a market maker, and leveraging that to kind of capture a significant amount of volume for all the on-chain swap activity happening in the retail app. And I think that, kind of having that utility token that sits on top of it, you think of it like an app store for agents. But instead of, Apple taking a 30% cut, the Mamo token holders basically earn 100% of the platform fees generated by those agents. If you want to go deeper on this, I would highly recommend watching that podcast with the Edge team, the Edge podcast that I just recorded several weeks ago, I go into a lot of detail about how that actually works and what the difference is. I think I can cover it better there. But think of MoonWell as the core lending markets, lending primitives that everything is built on top of, and then think of Mamo as a platform for personal finance agents that returns 100% of platform fees to the token holders.
Awesome. So 2 more questions. This next one is, will Merkle be used for staking rewards going forward, or is there a better implementation in the works? Also, are the issues with proposals failing to execute being addressed?
Sure. Let me take the second part first. So yes, lately there have been some issues with proposals failing to execute. And primarily this is due to a lot of tooling issues on the Moonbeam network where we have the cross-chain governance kind of originating from. The multi-chain governor exists on Moonbeam. This is one of the reasons why I mentioned earlier in the call, and you also mentioned that we're considering a governance proposal that would migrate the governor to Base so that we can basically vote on Base, as that is where most of the TVL and users are in the first place. So it makes more sense for us to vote and have the locus of governance be the Base network. Then have Moonbeam markets stay active, but be more of a satellite to the Base, which is basically the liquidity hub of where most of the MoonWell TVL and markets live. And so that will help us to resolve some of these issues, but also MoonWell contributors behind the scenes have been migrating from OpenZeppelin Defender, which is the software we use to automate proposal queuing and execution in the past, to Gelato. And Gelato is going to provide us with a more resilient way to kind of automate tasks. Gelato is used by a lot of other DeFi protocols, big protocols like Morpho. And it's basically a way of creating Web3 functions that execute Solidity in response to events. And so the primary reason we haven't migrated to Gelato in the past is that it isn't supported on the Moonbeam or Moonriver networks. So without that support, it made it really hard for us to do automate governance there. OpenZeppelin Defender is being sunset in July of next year anyways, so we needed to do this migration. And this will make proposal queuing and execution more reliable. And also having proposals execute on the Base network when we migrate the governor there, if we all vote for that, will also make proposal queuing and execution more reliable in the sense that proposals will only take 4 days to execute, as they won't have to go through an additional cross-chain time lock for another day. So governance can happen faster and more reliably using Gelato. So kind of excited about that to happen behind the scenes. And then would you mind repeating the first part of that question?
Absolutely. Will Merkle be used for staking rewards going forward, or is there a better implementation in the works? That was the first part of the question.
Yeah, so Merkle does need to continue to be used for staking rewards, and there's a few reasons why. So first of all, the Merkle campaign, I know it's not exactly as nice as it was before when you could just claim your rewards instantly and compound them daily if you wanted to. You can claim them basically in arrears for the previous campaigns. And so I know that there's a delay there, and that's been frustrating, especially we've had some front-end issues we just ironed out that weren't allowing you to claim, but I believe those are all resolved now, so you should be able to claim your past safety module staking rewards. If you haven't already, please go to our website and do that now. But there's a few benefits that Merkle gives us that weren't possible in the older version of the safety module where you just claim them directly. One of them is that it lets us reward other types of activity besides just staking the safety module. So for example, we now have this new Lunar Labs MoonWell credit facility where we're able to borrow against the WELL tokens that are held in the Lunar Labs treasury, held in the MoonWell Foundation treasury. And we've already started doing that through Morpho isolated markets and the MoonWell ecosystem USDC vault, which just launched. Now, one of the nice things, we've just created a market for staked WELL. And that means that you can actually stake your WELL in the safety module and borrow against it. However, I will note that the supply cap for that is super low because we don't yet have DEX liquidity for staked WELL to WELL. We're working with the Aerodrome team to kind of build some DEX liquidity first so that we can increase the supply caps on that market safely, or Antheus Labs, the risk curator for that MoonWell ecosystem vault, can do so. Now, sorry for being so technical, but why does this matter? So in general, the nice thing about staked WELL is that when you hold staked well in your wallet, you're able to, kind of retain your governance rights. You can vote in governance, and you're also able to kind of capture that the protocol revenue through the reserve auctions. So you're not only, kind of holding staked well in your wallet, but you're also, benefiting from having full governance rights and also having the ability to kind of capture protocol revenue. And so we want to extend that benefit to people that want to borrow against staked well. So this simply means that you'll be in the near future, this doesn't exist yet, but you'll be able to supply your staked well into that Morpho isolated market. You'll be able to borrow stablecoins against it, USDC, and then from the MoonWell ecosystem vault, while you still retain your governance rights and you still are able to capture staking rewards from Merkle. So this, you can kind of see how this creates a really nice way for people that are long-term supporters of MoonWell, people that have been staking for months or years, to kind of, have their cake and eat it too. You get to retain your full governance rights, you get your full staking rewards, you get all the benefits from the reserve auctions, but you can also borrow against your staked well if you need to, go buy things in the real world, or, not that I recommend this, but you may want to go leverage long other coins or even MoonWell itself. So I think this is sort of the longer term vision. We hope to have this ready by end of year, where you can, this will also coincide with the governor migration to base. This is another thing made possible by migrating the governor to base, is that we can now give governance rights to people that are supplying collateral in that staked well isolated market. So just to summarize, Merkle does need to continue to be the claiming rewards mechanism for the safety module, but that will give us the benefit of people being able to borrow against their staked well on Morpho from the MoonWell ecosystem USDC vault. And I'm pretty excited about that, because that kind of like completes the circle of like, hey, you can, you can have your cake and eat it too. You can stake your well, you can borrow against it, and you can still retain governance rights and fee capture.
Awesome. One last question, and then we can stop things from here, or someone else can, or I guess Boardroom will take over. But Steve Dirks from Charter Digital asks, how do you feel you've positioned MoonWell and Mamo heading into a potential base token launch that could inject new liquidity across the ecosystem? Do you believe MoonWell is well positioned to capture those flows, or could it risk getting lost in them? I know that you touched on most of this earlier already, but just want to circle back and end on this.
Yeah, thanks for the question, Steve. Thank you for being a long-term supporter of ours. I think that MoonWell is very well positioned to kind of capture a lot of the flows from the new base token launch. For one, we've been, our protocol has been around the longest out of any of the lending protocols on base. We were there day one. And so we have a really long track record of not just, providing the best markets for collateral on base, the most native base tokens, but also having the most organic users. While some of the other protocols have a few large users, MoonWell has the most small organic users. And there have been a lot of programs we've participated in at the Coinbase level that people may not even be aware of. For example, Coinbase initially back in 2023 offered this sort of attestation for contracts that was never really used, but allowed us to kind of mark our MoonWell contracts as, sort of approved as a legitimate app, if you will, in the base ecosystem. And so if you look at how the base token distribution will most likely play out, it will be distributed to the apps and smart contracts and users of those smart contracts that have the most history established, that have, a track record of, thousands or millions of successful transactions on the base network over many months or years of time. And so that in itself is, all of the lending and borrowing and, all the activity that users have made until now is likely to be part of that initial base airdrop. But it won't just be an airdrop, I don't think. I think it will be an ongoing campaign that will continue to happen every few months or every few weeks, that will help reward creators and apps like ours on base. And Jesse talked about this a bit, and maybe someone can share a link to this article, because I want to kind of go back to my notes on this just to kind of wrap things up. So the question that what Jesse said in a closed door session that was really kind of interesting was really kind of acknowledging that there are some challenges with the current base ecosystem. So, for example, Jesse talked about how creator coins haven't really been well received, or there's not like a lot of volume or demand for creator coins yet on Zora. And part of the reason for that is that he talked about the two-sided marketplace, where you kind of need consumers that are buying the tokens and you need pro traders that are buying the tokens. But most of their focus right now has been on the supply side, just trying to get people to issue tokens. And so he kind of acknowledged that, hey, the reason why the creator coins haven't really taken off yet is we haven't really satisfied the demand side of that equation. We don't have a lot of people that are out there trying to buy creator coins like they are on Solana, like Pump Fund and whatnot. So Jesse kind of acknowledged that, like, hey, that doesn't exist, and we're trying to create that. So I think what that implies, if you kind of think about the base network token launch, is that they're going to want to reward people that are buying coins. They're going to want to reward people that are using apps like MoonWell, like Momo, and they're going to want to reward people that are doing daily actions on chain. And ultimately, I think that's why it will be a very different liquidity mining campaign than what we've seen in the past. I don't think they necessarily want to reward whales that are just going to invest a few $1 million and just park it in some protocol somewhere. They really want to reward people that are taking daily on-chain actions with small amounts even. Jesse is really big on, creator economy. And so one of the things that we're working on doing, just to kind of like give people a window into the near future. So those of you that kind of followed the MoonWell ecosystem USDC vault that we just recently launched, that's providing borrowable liquidity into the Well USDC isolated market and the STK Well USDC isolated market, and also Momo USDC isolated markets. We're planning on open sourcing all of the tooling around that and creating a case study after we have a few months of data that shows how MoonWell was able to borrow against their tokens and not have to sell tokens to fund expansion. And we want to publish this so that creators in the ecosystem can actually do the same thing with creator coins. And by publishing this, what this will allow creators to do, smaller projects than us, people that are just creating content on Zora, or people that are creating smaller apps like really solid DeFi apps like BMX, for example, that are building innovative technology but haven't been widely discovered. I'm just using them as an example. I really like the product, and I think that they're just kind of an undiscovered gem on Base. But there's a lot of projects like that, like Talent Protocol, for example, others like that just haven't really been discovered yet and haven't made it to the big times. Those people will be able to use the same playbook to create their own isolated markets and then borrow USDC liquidity against it. And I hope to help Coinbase create a base ecosystem vault, just like we have a MoonWell ecosystem vault, so they can start supplying borrowable liquidity into these markets. And I think that will kind of inherently encourage more and more creators to kind of do something with their creator coins. For example, let's say I'm just creating content on Zora, I'm creating videos. I want to buy a new camera, but I can't afford it. So rather than selling my creator coin and dumping it to zero, what if I could just borrow $5,000 against my creator coin, go out and buy a really nice camera, and now I can make more professional content to post on Zora. And Jesse really has a strong desire to promote things like this. And so I just think that this positions creating a case study and then open sourcing all the tooling and making it super easy for creators to and other app builders that are lesser known to actually kind of grow their brand, grow their content, grow their apps on Base, will help position MoonWell to kind of be this base layer that helps provide that infrastructure, built on top of the Morpho vaults that we already know how to operate, built on top of like the isolated markets that we're proving we know how to operate as well. And then, kind of figuring out ways to make it so that Coinbase themselves and Coinbase Ventures, can basically fund this base ecosystem vault. And we hope to partner with them on this, because I think this would be a really compelling way to kind of get capital into the hands of creators, and then basically make the Base network token launch not just a simple like farm and dump token like a lot of the other ecosystems, but actually a way to kind of like bootstrap the creator economy, which Jesse is really keen on bootstrapping. And then of course, I think this is where the MoonWell expertise really shines, and that we have the deepest expertise in creating these on-chain money markets, which I think are just really powerful primitives, ways to kind of leverage and borrow against what you have, as opposed to, you know, selling your tokens. And you know, this should be compelling to, I think, a lot of creators too. A lot of the creators really want to come onto Base, but they're afraid, like, what happens if I sell my coin? All my followers will think I'm dumping on them. But we think this creates a more virtuous path, where it's like, you know, as a creator, you can just borrow against your coin and use it to, you know, create better content, or use it to build better apps. And so we hope to be a big part of that in the coming years.
Awesome. That was the last question. So I'll let Boardroom handle it from here.
Cool. All right. Thanks, Darren. Yeah. Thanks, Luke. Thanks, Darren. Thanks, Antheus. Yeah, I hope everyone likes the streamlined structure for the calls here. And as we're getting close to wrapping up, and speakers, go ahead and cut me off if you had any other final points you wanted to get out. But for the audience, yeah, look out for the Google form link that's posted on the forum and here on X in November, so you can submit your questions. Yeah, it's impossible to get to every question, so feel free to resubmit it if we didn't get to it this month. And yeah, as always, that was a lot of info, but the call was recorded, and we'll have a recap up on the forum in the next couple of days. So watch out for that. And yeah, if there's no final points, I think we can go ahead and wrap here.
The only part I found disappointing, guys, was the fact that Chainlink Rep decided not to participate. That was a little disappointing, but understandable at the same time. But a lot of good information to digest there, guys. One of my favorite decentralized finance plays, absolutely, MoonWell, going to do fantastic things moving forward, in my opinion, guys. And as I said at the beginning of the stream, or the beginning of this video, my friends, if you're new to crypto, if you have never been through a bull run before, listen, there's no shame, especially on a day like today, in having a community behind you to hold your hand through this, that's been through multiple cycles. If you want to book one-on-one coaching calls, you want to sit down, have a chat with me one-on-one, figure out how I got through my first cycle when all of this stuff was happening, right? We can sit down, you can book a one-on-one, you can join our group coaching calls. We also have a trading group in our VIP community as well, where we drop daily trades and so much more. So check it out today, guys. The link is down below in the description, or you could use the QR code in the top right-hand corner of your screen. Click like if you like this video. Click subscribe if you really liked it. I'll see you guys in the next one. God bless.